Hey traders, welcome to Charts and Coffee. Happy Tuesday, happy October. We are kicking off the last quarter of the year, first trading day of the month, and we are looking at what continues to be a gravity-defying overall year of strength, of follow through. It just reminds us, I was just thinking about this. There was so much discussion, and I keep an eye on it too, right? But seasonals are not setups. Remember, September was supposed to be this, right? It's almost upside down, isn't it? And it doesn't mean that October is going to have a rally at the end of the month either. Please remember, as much as we can get carried away and we want to be aware, but we don't want to confuse them with actual setups of what these seasonal trends are. We've talked about the fact that when we're discussing different kinds of trends, the fact of the matter is that different trends are going to be affected by the different monetary policy cycles that we're in. We're in a cutting cycle that is not bearish, right? Also, when we think about what's happening with the overall trend of the year and the fact that we've been anticipating these cuts for as early as March, right? The first earliest expectation for Jerome Powell and company to cut was as early as March, but delays are not necessarily going to undo the uptrend. We just move the optimism further down the calendar. That continues to be where we are. Now, as much as I would love to say trading the NASDAQ and the S&P has been easy the last 3 months, it hasn't. We've had a lot of volatility, but it has been predictably bullish. In other words, if you have a way to find a dip, if you have a way to find what support you want to buy from it and a methodology, a formula to manage risk from that entry, it's made a lot of sense to stick to the long side. It's made very little sense to be bearish, especially when you look at a year that's looked like, and there you go. You look at a year that's looked like this. On no planet is that a bearish year. And yet there's still so much skepticism about soft landings and the Fed and the trends. Probably the index that's struggling the most continues to be the NASDAQ. Tech has had a tough go of it, but that may not be for long. You'll see here on the left side, and I did mean to mention a couple of housekeeping things, especially for my Sector Secrets members out there. Today, of course, as we do every morning, we're going to be having our day trading, the open session for about an hour. Then we'll move on into our swing trading session. That starts at roughly 10:30. So from 9:20 to about 10:30, we focus on 5-minute time frames and day trades. And then from 10:30 to 11:30, we focus on swings. And that's the heart of the service, those overnight positions. And that's really where the account growth, most definitely, in September, these aren't September's completed numbers. I'll actually have those numbers for you tomorrow in the webinar. You might say, Rog, yeah, I saw that you were up. Then the number is actually low because we actually closed out a few more wins. And we have a few new entries as September wrapped up. So this is what I like to share with everybody. As of Monday, we closed out, and I was out of town. Some of you might know. I was out of town, but we closed out our win in Amazon. Had to close it out at a break even. And then these are all the closed trades, just the swing trades, not the position portfolio entries and not the day trades. These are just the swings from September. And we had a lot of wins. We had some losses too, no doubt. But overall, it's been a very, very good month. And you can see what we've been doing. And I'll have the completed September view for everybody for our webinar. And if you did not know, tomorrow, 8 p.m., we're going to have our webinar, simplertrading.com/reliable. Rog, is this the same webinar as I saw last week? It is not. We're going to have new chart examples. I'm going to dive a little bit more into SPX. We're going to dive a little bit more into risk management and the account growth. And I want you to notice something. They're two different things, right? They're two different things. I think a lot of folks say, Rog, I'm pretty familiar with this whole Holy Grail risk management process that you have. But how is that different when it comes to growing a small account? Because they're layers, right? They're layers. They build upon each other. If we don't start our trading mindset with a risk management approach, the opposite side of that is blowing up an account, which, there's not much that I can tell you I've never done in terms of making dumb mistakes in trading, but I've never blown up an account. And so that is really very much my trust, my reliance on a formula that says there is a certain number of contracts you should be trading, and there is a certain amount of risk that you should be taking. But is that the same thing? Is risk management the same thing as account growth? No, it's a piece of it, a very important piece of it, but it's a piece of it. So we'll get into those pieces and how we've been trading all year. But I think emphasizing what's happening most recently is really important, as opposed to talking about maybe the first few months of the year, which were ridiculously fantastic, straight up markets in January, February, March. But I wanted to pick two of the tougher markets. They happen to be the two that we're all trading through right now, August and September. These aren't straight up markets. And yet, if you have a formula for managing risk, a formula for position sizing, a formula for finding what to trade, you're going to find it's really difficult to look at what everyone else is looking at. You're going to find when you start building look at our positions right now: gold, consumer discretionary, and Newmont mining. These are our positions that we just opened right now. What's on my watch list? I'll share with you right now. Basic materials. I want to get back into industrials because that's an open trade that I still have. And I want to get back into utilities. Why those? Because we have a very specific process for finding what has the probability of follow through. Notice what's not here. It's not a bunch of tech, not a bunch of Magnificent Seven. It's not my favorite stock. I don't have a favorite stock. It's always going to be a fluid thing. So if you're finding yourself thinking, Rog, I think I've got some of the basics down, but I'm not seeing the follow through like you're showing, it's probably not necessarily an issue of deploying a call or a spread or whatever in the wrong way. It's probably doing the right thing for the wrong stock, for the wrong symbol, right? And those are very pertinent to, of course, account growth. So this is what I've got right now. We've got an open position, the 52.5 calls in Newmont mining. I've got an open position in the 198 calls in consumer discretionary, and an open position in GLD from the 243 calls. And we're managing those long. Notice they're all calls. And then I want to put those other three symbols: basic materials, industrials, and utilities. I'm looking to set those up maybe this week, their relative performance. And you're going to notice this is not what the broader markets are talking about. This is not what your typical traders are trading. Well, unless they're watching my watch list, in which case then they are. So remember that what is moving is not necessarily going to be what's being discussed, right? I'm using TradingView charts today because one of the questions that some folks asked me after we went through the material last week was, Rod, we see that you're using Thinkorswim. And I was, because that's still by far the most popular platform here at Simpler Trading. But one of the things that a lot of traders tell me is, Rod, I don't use Schwab. I don't use Thinkorswim. I'm using Interactive Brokers or TradeStation or Tradier. The indicators that you use, are they available on another platform? Yes. The other platform is TradingView. And this is broker agnostic. It doesn't matter who you trade with. You can use this for charting, for alerts, and then you could execute your trades. I'll tell you, probably 40% of my trades are executed on this thing, on my phone, because I get an alert. I just have to buy a call or a put. It's on a complicated entry. I know what price at which I want to do it because the alert is, telling me what price I want to buy the option at, what target I want to scale out at. We have a fixed risk approach. So all of the pieces of the trade are known. So it's not uncommon for me to put trades on the phone, while I'm at the grocery store or at lunch. That's the kind of advances in this kind of tech that we can use to have a trading partner who never sleeps, which is pretty great. All right, so let's get to it. Let's see, got a couple questions coming up. If you haven't already checked it out, simplertrading.com/reliable. Those of you that are wondering, Rob, you tested small account trading SPX for the past 6 months. Can you tell us more about that? I will tell you more about that on Wednesday. All right, let's see. Let's see what else we have here. Um, Grace says, I remember when you did longer days, 90 days expiration. Um, it's never been a fixed, Grace, depending on the structure. So one of the questions that comes up is in terms of how much time to expiration. So let's think about this for a moment. And this is part of any kind of account growth plan, including a small account growth plan. Is there a trend? Why would I want to pay for more time, which is an expense, right? Is there a trend? What time frame am I trading that would merit wanting more time? When we have trends, yeah, as much as I can possibly afford in terms of the cost of the option, as a function of how much, if that were to get stopped out, I lose in my account. That's all part of it. But remember, the longer, further dated the options are, the more expensive they are. And while there's a trade-off, because there always is, while there's a trade-off in terms of follow-through, meaning my option might expire and that trend might still be going. That's okay. It's going to happen. But the trade-off is less time to follow a trend. So there's no right or wrong in that. But I do see, especially in this environment, it's been better for me to keep that time horizon really inside 3 to 4 weeks. That's actually, you mentioned even 30 days. No, sometimes I'm even 21 days or less to expiration. So, and there is a sort of checklist, if you will, to say, do I need that much time or do I not? What time frame am I trading? What's the structure of that time frame? So there's a repeatable process for that. All right, can I please tell me the name of the indicator? I have a lot of indicators running on this chart. I shouldn't say a lot. I have a handful. I have the top tier wave, which is a mean reversion tool. We have the daily price movement ranges, which is this kind of gold or brownish gold and gray zone. And I have the top tier candles running on this. That's what's color coding the candles. And then I have some automated support and resistance. Everything that I do in terms of automation keeps me from having to do anything manually. Manually means A, it takes time. B, it's always subjected to potential errors, especially the errors of a learning curve. One of the things that I love about what the indicators at this point have allowed traders to do is save time and increase accuracy. And I think also a byproduct of automation is reducing. There's never zero emotion, but reducing the emotion behind the analysis, because it's not me saying support or resistance there. It's a process that I trust. And the learning curve ultimately is far quicker when you have automated tools, because at this point, a trader could say, all right, this is a choppy market, a bullish or bearish market. The momentum is choppy, bullish or bearish. The candles are green, bullish. The candles are red, bearish, or the candles are neutral, right? It's just reading what's there. And then based on what's happening, candle colors, market structure, automated support and resistance, we can choose to get in or not. When I look at something like Newmont Mining, what was this? This was a trend, an uptrend. This was green candles. This was a mean reversion, right? Same thing. We've been in and out of gold many, many times. We have the 243 calls right now. What was this? It was an uptrend, green candles, and sunk into the daily price movement range, right? One of the things you'll also see is, because we're so specific about the zones, and this is very important for small accounts, because one of the worst things that small accounts can do is add after a position starts losing ground. In other words, when you're a small account, you need to know and I like looking at up to 3 triggers. You need to know all 3 of your triggers beforehand, because if you don't, how do you position size accordingly? If you don't know there's a second or a third add coming along, right? Add is an acronym. Please write this down. Please remember this. And there's no exception. Add is actually denial and delusion. That's what it means. It's an acronym. Adding always happens when a position is losing and that trader wants to reduce the cost basis. Scaling in is knowing all of your 1, 2, 3 triggers up front, so you know how much in terms of dollars in your account you are spending, right? If someone does, imagine going for a road trip, filling up your tank because you know you're going from, I live in South Florida, to Orlando, and then all of a sudden someone says, no, we're going to Atlanta. And you go, well, I wasn't prepared for a trip to Atlanta, right? No, we're going to Virginia Beach. Oh, I wasn't prepared for the length of that. I didn't pack accordingly. That's the same thing that adding is. It's like, oh, we were going from point A to point B, but now we're going to go here. There's no way to prepare for that. So please remember, that's one of the easiest ways. You want a guaranteed formula to blow up an account? Max debit, add to a loser, right? There are certain things that we consistently do, and trade against a trend. And there are a number of trends out there. And if you'll notice with the 6 symbols that are here, 3 of which are open trades, they're all trending symbols. All right. All right. Very cool. So that's what those indicators are. And I will cover, if you want to know more about the indicators, I as we go through each example, I do highlight an indicator or two and describe what its job is. And I will be doing that. Absolutely. I will be doing that in the webinar. And we did it last time too. And I'll be happy to do it again. Absolutely. All right. So let's see what else we have here. Tech sessions. Okay. So the tech sessions, depending on where you're, if you're in the mastery, if you're in the Simpler Trading Mastery, we have a tech session every Monday. If you're wanting to join the class, we will have a dedicated tech session before the class, which is what's really cool. So by the way, that the class is happening October 5. The tech session is going to be October 4, that Friday, because one of the things a lot of traders like having, and I get it because I would too, is we want our charts ready to go when we go into the class. Not that we need them. I'm going to be in a classroom environment. We're going to be taking a look at charts and steps and formulas together. But one of the things a lot of traders like knowing is, okay, my charts look like Raghee's. They're set. I've got them, programmed. I've got my layout saved. And it's definitely something a lot of traders like having before the class. And so, of course, we will definitely do that. All right. Dylan asks, do I have an opinion on the natural gas infrastructure, NFE? I'll tell you, I don't look at NFE all that often. This is New Fortress Energy. Okay. So here's what I typically do. Dylan, no, this is a downtrend, which is really interesting because Natty is in an uptrend. So I think the first thing that I would notice, Dylan, and this goes back to, and it's a great question, Dylan. This goes back to understanding account growth, right? Alignment. This is very much something that I teach, which is the stock or whatever the symbol is that I'm trading. Is it moving with the other symbols that it should be? In other words, if I've got you mentioned, I didn't know what this stock was, by the way, Dylan. If you've got a natural gas infrastructure play, shouldn't that benefit from the overall strength in Natty Gas? So another place I'll look, Dylan, if you're just curious, I'll look at something like FCG, which is a natural gas ETF. And one of the things I've noticed is that, and this is happening with oil stocks too, we're not seeing the sync as well of the futures contract and the smoothie delivery. We're not seeing as much connection between the all right, by the way, for those of you watching at home, it looks like it's a strawberry smoothie today. Yeah. I think she's been mixing a little bit. So for those of you who don't know, Rog, what is going on? My mom makes me a smoothie every morning. It's good for the brain. All right. So I would say keep an eye on FCG, but if it's not moving with natural gas at the moment, I wouldn't be too keen on trading it quite yet, unless your time horizon is far longer. I'm looking at a daily time frame right there. All right, gang, we are here every Monday through Friday from 9 to 9:20 a.m. Right now, I've got to go jump into the Sector Secrets Mastery. We're going to continue to manage some open trades. Looks like we should have maybe we entered 3 trades yesterday. Looks like we might have our first 3 winners of October, at least scaling out, not getting flat. So we'll see what we get there. Have a terrific October. Again, happy October. Looking forward to seeing you all on Wednesday. There's still 1 quarter left, gang, in the year. it is definitely not too late to take advantage of what's been happening. And we want to definitely be ready for 2025, where I expect a lot of this macro to continue. So come check out what we're doing on Wednesday. Looking forward to seeing you then. When you're there, let me know that you're at Charts and Coffee. We can see all the chatter. We use Zoom. So let me know that you're coming from over from Charts and Coffee when I see you Wednesday. Be good to each other.